Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 126 for May 12th, 2020. My name is David Coswiger. I'm the creator of TimingResearch.com, and today we will be analyzing your trade ideas. So today I've arranged for Jake Bernstein to join us again, and Jim, the option professor, is back to moderate. So I'm going to go ahead and turn it over to Jim.
Okay, a lot of volatility today, guys. So we are going to have a lot to talk about, and we're very lucky to have here Jake Bernstein, who has a long storied history in the market analysis business, as well as he's an author of many, many books. And there's many specialties that he comes to the table with, including watching things like seasonality, cycle activity, as well as commitment of traders and other major things you want to keep an eye on. So he's going to add a lot to your toolbox as far as how to analyze these markets and how to proceed. For people who are not aware or newcomers here, Jake, a little background on yourself and what your company's doing right now.
Sure. Been trading for, hate to say it, half a century, 50 plus years. I'm a real trader. I trade what I teach what I trade. I trade practically every day, not necessarily day trade. As you say, I've written about 45 books, been on Wall Street Week, you name it, CNBC, FNN, lectured all over the world. My work is completely objective. It's rule-based, it's clear, it's not interpretive. And there is no looks like, there is no analysis, there is no trend lines, there's none of that stuff. There's just specific indicators. And to find out more about me and a very special webinar I'm having for 2 hours on Thursday, go to my website, jakebernstein.com.
Okay,
So
and at the end of the broadcast, we'll reiterate how they can get a hold of you at jakebernstein.com and take advantage of that Thursday seminar, which I think is a very timely one, because as we go through these markets, it's clear that the winds of change could be blowing pretty quickly here. On the screen here, are we going to look at S&P to start out with? Is that what you've got up there, just to get an overview of the broad-based index?
Yep.
Yeah,
so here is the S&P.
I just want to point out real fast too for the audience that this is Jake's screen that he's sharing, so you get to see what Jake actually looks at personally for his trading. So
thank you. So this is the daily chart of S&P, and I have here on the chart my indicators. This red line here is a 10-day moving average of high. Green line is an 8-day moving average of low. Down here, we've got the blue line, Williams accumulation distribution. And this smooth line is a moving average of Williams. At the bottom of the screen, I've got small trader sentiment, which is something we've been gathering every day here since 1987. It's the sentiment of the small trader. The expectation is that when the small trader is very bearish, as we hear, in other words, 90% of the small trader was bearish, correlates very closely with bottoms, whereas very high sentiment readings correlate with tops. This indicator here is MACD divergence. When we make a new low in price without a new low in MACD, we have a setup which needs to trigger and which gave us a buy trigger one day after the low. How good is that? The green line and the red line show support and resistance. So you can see that we've had support a number of times throughout this move. And today's move, not abnormal, most likely to find support tomorrow. So this is a new uptrend which started all the way back here and continues to this day. The sentiment as of the end of the day yesterday is neutral, with about 57% of the traders being bullish or bearish. So there's nothing to be gained in the way of market sentiment right here, but it is an uptrend, and in an uptrend, you want to buy support and sell resistance. And that's my general overview.
If we were to break under 2800 area, which also corresponds to about the 3-year moving average, would that maybe open the door to some acceleration?
I'm sure that a lot of technical traders will take that as an idea that the market has topped and we're going to come down and test this bottom. But right now, if we want an intermediate term picture, we go to a weekly chart. There is no question whatsoever that the weekly chart has definitely turned down and remain in a downtrend. And we can see that as prices came up, I'm going to remove some lines here. they did encounter considerable resistance at the top of the channel after giving sell triggers. So the intermediate term trend is down. The long-term trend measured by the monthly is still up in a very big bull market that started quite some time ago. So in order to get a good answer to the question, we have to figure out what is the time frame in which we want to trade. We want to trade daily, different answer to the question. If we want to trade weekly, if we're investors, different answers for everyone.
Okay, well, let's start pecking away at the list here, and then as we get through it, we'll go over some of the things that you're looking at, and we definitely want to save some time for commodities because your experience in there is well known. So let's start with something that is a commodity, gold, GLD, and get an idea of how you feel about GLD.
And I assume that our comments are going to be mostly short term. Would that be correct?
Yeah, I would think relatively short term, probably on a month basis, maybe.
Yeah, so this is what's really messing a lot of people up, is the idea that people held for many years, namely that gold and stocks need to move in the opposite direction. So supposedly, if the stock market's going down, gold should be going up. But here's an environment in which gold and stocks are going up together. And this chart, daily chart of GLD, is a thing of great beauty, because not only did it give buy triggers over here, but you can see that every time, without exception, that it's come down to support, it's come up to resistance. And the profitability here is the range of the channel. So that's quite a bit, even though it looks small on the chart, it's quite a bit of profit as a swing trader. And there's nothing in the gold here that makes me change my point of view, namely that the short term remains up. If you go to the monthly chart, or the quarterly chart, I should say, you can see what happened. And this is what's really spooking a lot of people. The inability to take out the all-time high. And so people say, oh, there's going to be a black swan event. The world's going to come to an end. We're going to get a crisis. Well, here's the crisis. It couldn't be much worse. And the gold has been unable to make new all-time highs, which is spooking a lot of long-term investors. So that's my big picture and my short-term picture of gold. Jim?
Quick question on gold, in that the dollar is still hanging around 100, the dollar index, and they just announced CPI was minus 0.8%, worst on record. So the inflation numbers stink as far as looking for inflation, and the dollar is firm. With that as a backdrop, is it possible that we would go down and maybe test some of the lower, longer-term moving averages, which might be in the 14 to 1500 area? Yeah, is that possibly in the cards, in the gold?
In the gold? Yeah,
yeah, in
absolutely.
the gold. Is it?
Yeah,
So if you're a longer-term holder, yeah. Okay.
Well, here's the thing.
Because some people.
Remember that gold usually makes its low in August and September. And so between now and August and September, it's going to be rough sailing. If there's going to be another crisis that shoots gold higher, it's going to be late this year.
That's
so
100% accurate, because I've always felt that the end, yeah. I think that's very good input, because if you're a longer term holder, you'd like to get in at a good price,
Well, and remember, you watch TV for about an hour and you're going to see buy gold, put gold in your IRA. Gold's the thing to buy. There's at least 5 different companies that are selling gold coins, gold bullion, gold investments. And that concerns me because it's all over the TV.
And the end of the calendar year and the new year, seems to, I say the end of the calendar year and the beginning of the new year is when it can really get on its horse. And that happened again this year too, as well. Next one up is going to be the Peloton, PTON, and that is a stock that has really taken off.
It sure has. Let's look at the chart. Here's a chart, and this is probably one of the most beautiful looking charts I've ever seen. It is not only following all the rules, but it's absolutely perfect in terms of the indicators, finding support at the bottom of the channel, giving us numerous bars outside the top of the channel, which is a very bullish leading indicator, giving us 5, now 6 consecutive days above the top of the channel, all very bullish. But the one thing that I would say is this: when the channel begins to narrow, by which I mean the 2 indicators get close to each other, that usually precedes the top. When the channel gets wide, as it did over here, that usually precedes a move to the upside. So the only negative on the chart here is this. The channel is getting narrow, and that's a leading indicator. It says if you're long this market, get some stops in there, take some money off the table.
And you might have a situation where they're losing on other stocks with the market down 400, and they may have to take some Peloton off to pay for the losers, right?
True enough. True enough.
Sometimes that occurs. Yeah. Okay, TTD.
The trade desk, right? TTD. Let me get that on here. Here we go.
This one held up good today, yeah.
Yeah, pretty good chart. Good looking chart. Good support at the bottom of the channel. Channel getting wider. This is the kind of stock I'd want to trade at the bottom of the channel, just in the same way that it gave an opportunity right over here. That's what's coming up pretty soon. The one thing that I would be concerned about as a precautionary note is this. When price is climbing, you want to see momentum climbing with it. That's not happening. So what's basically saying is this. The amount of buying that's going into this stock is not really strong buying. You want buyers to be chasing prices higher, which would put momentum higher, but momentum isn't declining, and that's a leading indicator. So again, it's a note of caution. It's not an indication to go short, not an indication to take money off the table, but an indication to be really careful because there could be a good correction here. So make sure you got some stops in here, especially if you're long from much lower levels. And unfortunately, a lot of stocks are beginning to look like this right now.
Do you ever use options as a replacement trade, meaning sell out some stock here and replace it with a 325 call for just a fixed premium? And then if it keeps going, you're hedged against getting out. But if it drops to 293, all you lose is the premium?
I'm not a big options guy. I see the value. I see people use them very successfully, but it's not something I generally do. In fact, I haven't traded options in a long time, so I'm not the right person to answer that question.
Okay. Let's turn to
the logic there.
Yeah. And it's not right for everybody. Microsoft rolled over today a little bit, and its PE ratio is up into the 30s, and it is testing that high, I guess. So do we feel like this market, although it has such great earnings and great businesses going, could be exhausting a little bit here?
If you think about the backdrop, let's be real about this. There is a huge crisis going on. It's a crisis that the government is trying to cure a medical crisis with a financial solution. And throughout this whole move, the trades have been beautiful. It's been the best trading market that I've ever seen. Buying support, selling resistance, buy and hold. And so to see a correction like this today in Microsoft and in Apple, which had a significant reversal today, not surprising and certainly overdue. Mm-hmm. I don't think we're going to come down and test those lows, but in this market environment, anything's possible. Going with the indicators, again, you see that same pattern that's of concern to me, which is higher prices with lower momentum. And that's not a healthy combination. So again, if I was interested in this stock, I'd be a buyer at the bottom of the channel. And we know what that channel is. For tomorrow, that number is 180.05, and that's where support should be found.
Yeah, I'm noticing the channel seems to be narrowing, though, and that's not a tremendously positive thing, right?
Right, exactly. And let me point out, you'll notice what happened right over here. The channel was very narrow, preceded a correction by 3 days. Over here, the channel was very wide, preceded a bottom and a high trigger on the momentum indicator. So again, on the MACD indicator. So again, warning sign. And there's a lot of warning signs all over the place, but that doesn't mean it's an end to this bull market. And it is a new bull market, in my opinion.
Well, the semiconductors have gone nuts on the upside, and this is another company that people are questioning the valuation level, meaning how much it's going for, not that it's not a great company. And that's NVIDIA, NVDA.
Oh, and, yeah. Let's put it on the screen.
This thing definitely had a little turnaround today.
You bet. Hold on a second. Here you go. And there it is. And again, let me point something out. The importance of today's price pattern. Let me make it a little bit bigger. So not only did we open on a gap higher, by which I mean we opened above the high of the previous day, not only did we open close to the high of the day, but we closed at the low of the day. And in terms of patterns and price behavior, it's a very negative indication, especially after an extended move to the upside. The opposite of that pattern would be right over here. Open on low, close on high, which precedes this move. So this is the exact opposite of this, which again suggests a further correction. And I wouldn't be surprised. It's certainly to be expected. We can't be breathing in all the time. We have to breathe out sometimes.
Do you ever look at any of the longer term moving averages? Because sometimes, you know, it gets a little bit overdone, like the 200-day is at 222, and we were up at 325, which is a pretty healthy distance away, right?
Well, let me tell you what I don't like about those longer term moving averages. If you backtest, for example, the so-called golden cross or the death cross, the 50 and the 200,
Right.
results are not that good, percentage accuracy. As a support number, the 200 is good, but then what do you do? In other words, do you get in? What gets you in? What gets you out? How much risk is there? So for me, there's just not enough information there, but as a guideline, it's pretty good.
Yeah. I think that's the only use is that, you know, if you get $100 above the 200-day, at least you know it's probably overbought, and then you can use your shorter term indicators to find out when and if you'd want to play the other side, right?
Correct.
Yeah, it's nice to know you're in the neighborhood of something if you're going to look at a strategy. You know?
And true enough. One thing
hmm?
and I point out one thing that's very
Sure.
interesting. I'm going to show a chart here. In fact, I got to go to this. Just bear with me for a moment. Hang on 1 second here. I just got to figure out where the hell I am here. Yes, so let me go back a little bit and show a chart. Let's go back a little bit here. Just bear with me. I'm getting there. Here is a weekly chart of the Dow Jones using the YM. This central part of the chart shows the commitment.
Oh, we're still seeing your NVIDIA chart.
Really?
You might have to, if it's on a different screen, you might have to reshare.
Oh, yeah, hold on 1 sec. Sorry about that. Let me come back to it. Hold on, please. How am I going to do this? I want to come back to my screen. Wait a second, please. Just bear with me. It's not letting me come back. 1 moment, please.
I think I can stop your sharing. Okay, now you can hit.
Just figured it out. Okay, here you go. Now what do you see?
Okay, it's loading.
Okay.
Okay, now it says click to add title.
Okay.
Yeah.
You see a chart with a bunch of red stuff, right?
Yes.
Okay, so here it is. This is a weekly chart of the YM Dow Jones. Middle of the chart, we've got commercial buying and selling activity. The normal behavior of commercials is to be hedged all the way up. So that's what this red stuff's about. The abnormal behavior is for the commercial, in this case, the bank, the hedge fund, to be buyers. You'll notice that right over here, before this big move up on the weekly Dow, commercials were buyers. The real question is this: what have they done recently? And this is very cool. In the last few weeks, during this big down move, commercials were buying the Dow Jones stocks. Very unusual behavior. They were not buying the NASDAQ. They were not buying the S&P. They were buying the Dow. Indication to me, they're moving into long positions in conservative stocks, the Dow stocks, very bullish, but not necessarily for technology, but for basic commodities, basic goods and services. So I wanted to show that chart. Now, if I could get back to where we were before, that'll be a miracle. Hold on one second here.
Yeah, it's interesting to see the postscript of the last time we had the growth scare where everyone was selling, they were buying. The postscript was very much of a nice advance. So it'll be interesting to see how the postscript of this works out. Huh?
Yeah, hold on one second here. Now I got to get back to where I was. Can we stop the screen sharing and start it again? Okay, here we go. Let me go back.
Yeah, you should be able to now.
Yep, I think I can do it now. Okay, so we should be back any second. There we go. Can you see it now?
Yep.
Yeah, it's back to the
NVIDIA.
So I just wanted to take a little side trip because it's very important. It's extremely unusual for large commercial traders to be buying into the big decline. And I would say that buying into the big decline is an indication they've got confidence that we're not going to crash or have a great big unusual economic decline. Very important for investors. Okay, let's go on. Let's continue. NVIDIA.
3M. Yeah, the next one is 3M. MMM.
Yep, gotcha.
It turned over pretty good today from the 147 down towards 141.
And this stock is clearly bearish. This constitutes a sell trigger, 2 bars below, Williams below. Notice what happened. Price continues to climb. MACD does not. Clearly bearish. And that's really cause for concern. But if you're an intermediate term investor, you're going to go to the weekly chart. You're going to try and buy the bottom of the weekly channel, which is 137, if I'm not mistaken.
Mm-hmm.
So there could be some support there. But that's the big difference between the charts we've been looking at and the charts that we're looking at now. Namely, this one is clearly in sell mode.
Okay, next guy up is Costco, which seems to be a company that just knows how to get it done.
They can do no wrong,
and,
right?
They can do no wrong. Let's see how it did today. Oh, it reversed a little bit today, 311 down to 304, but nothing too bad.
Not a real beautiful chart, but again, it depends on what you want to do. If you want to be a swing trader, all of these moves to the bottom of the channel and back into the channel or to the top of the channel are all swing trade opportunities. So again, if you're a trader, there's a lot of opportunity. If you're an investor, you want to go to the weekly chart, buy the bottom of the weekly channel, which is a ways down there. Or if you're a long-term investor, go to the monthly chart, and that gives us the monthly buy trade, which is all the way down around 285. And that's what we got on Costco.
Next guy up is Chipotle, CMG. Very good balance sheet, I've been told, but it also has a very high valuation. Huh?
You know, the thing I can't understand about
77 to 1.
Chipotle, the thing that I can't understand about Chipotle is their Mexican food isn't even any good. So it's a beautiful chart. I don't consider it real Mexican food, but hey, we're traders. We're not here to talk about Epicurean delights. The bottom line is it's a beautiful chart. The channel is not too narrow. You have multiple bars above the top of the channel. The only negative here is declining momentum, declining MACD, which is not unusual after this big of a move, but it is a beautiful chart and it continues that way. So I can't be bearish here. I'd have to be a buyer at the bottom of the channel. Bottom of the channel, right, showing here on the right at, what is the number here? Looks like 882.
Mm-hmm.
So that would be support.
Yeah, it has a pretty violent turn today from 966 to 929, but The green and the red are right underneath it, so maybe the decline would be capped at those levels.
Should be. Might dip a little bit below it like it did over here. These numbers are not, they're not like written in stone, but they're just approximate areas of support. What's next?
Well, this next one's really interesting because there are a lot of people who think that when Boeing sold $25 billion of bonds, that was the indication that the lows are in and that a recovery is coming, because 25 billion of bonds is pretty good confidence somebody must have.
Yeah.
And this thing is still within earshot of a low. Is there indicators here that you can see that could give us an indication that it's a decent buy down here?
It's a trading stock. Beautiful swing trade within the channel, but otherwise it looks like death warmed over.
Yeah.
Nothing there that would get me into this stock right now. As a weekly, it looks like death warmed over.
Mm-hmm.
The monthly looks horrible. The indicators are pretty negative. We can even go to the yearly chart over here and see what's gone on. So it's given up almost everything it's gained in the last X number of years. So as a trading stock, sure, but I don't like to trade stocks that are that expensive because I can't accumulate a really big position. So again, it's pretty negative. If you're an investor and you think it's going to come back, the real issue is air travel going to come back? And that's a whole big other issue that I don't even want to think about.
Mm. So there's not much you can really see there other than it's in a pretty tight trading range there.
It's a tight trading range. Good for trading, but but not for investing. And again,
but there's no indication that it's going to go and fill up that gap from the 200-day moving average, or not from the 200-day, but those other like on the monthly you were showing. There's no short-term price evidence that going back towards 318 or even 235 is in the cards now.
No, not the kind of stock I'd be interested in right now. I mean, they're still going to make military planes to kill people, but I don't know about the airline industry.
Only the air will kill people on the passenger flights, right?
Exactly.
American Water, AWK, and this one had a pretty good run from 92 to 141. Now it's 117.
Yep.
And
clearly a bearish chart. Gave sell triggers. Gave us divergence at the top, by which I mean new high in price without a new high in the indicator. Sell setup and the sell trigger. Resistance at the top of the channel. Clearly bearish.
Well, we got the Payment People Square, SQ. Maybe after this, we'll take a look at PayPal because that's kind of another one in the same vein. But anyway, on this one here, SQ, what are we looking at here?
Beautiful chart, bullish trend, multiple consecutive bars above the top of the channel. All the indicators are bullish. Great stock to trade. I'd be a buyer bottom of the channel, 88 and change.
If we were to look at PayPal, which is PYPL.
Here's PayPal.
In the same genre.
And that is one heck of a beautiful chart.
Yeah.
Not much to say here, except it's clear. There's one thing on this chart, which I've said before, and I'll say it again. Very narrow channel. Beware.
I was going to say that looks like a big yellow flag there with the lines getting so close and this thing having a little bit of an island up there.
Yeah.
Yeah, that would be something that if they blew out the candles, it could go down pretty good there for a while.
Yeah, just be real careful with that.
Yeah, you have to be careful of that one. All right, here's another one that is a virus stock. It's called Zoom, and they went from like 10 million users to 300 million users. And today it rolled over a bit from 168 to 161. And they've got competition now from Microsoft, Google, and Facebook. Right. So what is going on here? ZM.
Oh, sorry, ZM. What's the matter with me? Here you go. And here's Zoom. You know, this is the kind of stock that'll give you money and take it away real fast because it's not consistent. So it would not be on my list of stocks to trade because it's not following the rules very well. You want to see consistent trends, just like we've seen on many of the other stocks we've looked at. So not much I can say about it. If you want to be an investor, You want a stable chart, go to the weeklies. The weeklies are always more stable than the dailies, and that's the kind of chart you want to see. But it's not a trading stock for me. Too much volatility, too much news. You never know when you're going to get Zoom bombed and all the rest of that stuff. So it doesn't really interest me.
You don't want the numbers dancing on both sides of your averages. Yeah.
It's all about
consistency. You were showing some very smooth ones, which obviously would be a better way to go. Now, here's
Jake, someone in the live chat is asking about the indicator on the bottom panel of your charts. Could you talk a little bit about that?
You mean this one here?
Yeah.
Way down. Okay.
Or both of them, I guess.
Yeah. The blue line here is Williams accumulation distribution. The smooth line is a 57, that's 57-day simple moving average of the blue line. So when you have a cross below the line right over here, and you have 2 consecutive price bars below the bottom of the channel, that predicts a change in trend. Conversely, if we go back in time, in fact, let's do it this way. If we go back in time, 2 bars above the top of the channel with the indicators crossing. If we had enough history, we could see that that would be a buy trigger. Example, let me put Boeing back up here. Here's Boeing. Go back to the chart, daily chart on Boeing, and here's what happens. 2 consecutive price bars below the bottom of the channel. Blue line, Williams below its moving average. Sell setup and sell trigger, and it's been bearish ever since, because even though we had initial indications of a bottom, that bottom was never confirmed by the trigger, which is at the bottom of the screen. I think I explained it. Any other questions?
You want to go to the next?
Sure, let's do it.
Okay, I guess there's one other question about what moving averages make up price action on Jake's channel. I don't think they are moving averages. I guess
This
they're
over
one with
here
the
is
red
a,
and the green.
Yeah. That is a 10-day simple moving average of highs. Okay. This is an 8-day simple moving average of lows. So we're not using closing moving averages here at all. We're simply using MA high 10, MA low 8. And that forms the channel. And the channel is a beautiful methodology because it'll give you support and resistance on any stock, any time, any futures contract whatsoever. And you combine that with the trend and you know what to do.
Yeah, a lot of people use a crossover of a 721 or a 5 and a 10 or whatever. This is using a totally different approach.
Right, that's right, that's correct.
Okay, the next one on the list had a big jump because of obviously everyone is shopping at the store, and it's still hanging in there pretty good. It's Kroger, KR?
KR. Mm-hmm. Here you go. And there's the chart. And again, I would rather trade a stock like this that is consistent, by which I mean gives you a buy setup, gives you a buy trigger, buy here, get out, buy, get out, buy, get out. Very consistent. It's not a great big expensive stock. It won't kill you to death if you're wrong. And they give you many opportunities with high accuracy compared to the Zoom chart that we looked at before. Kroger, clearly in an uptrend.
The next one on the list is Paycom Software. Again, everybody who doesn't touch money seems to be doing pretty good. PayPal, Square, these guys probably are doing okay.
YCM?
Yep, PAYC.
PAYC, right, sorry.
Yeah. Had a rollover today of about $10, but other than that, it's obviously gone on a nice run from 160 to 280 during this run. So that's a heck of a nice bump.
Yeah, in terms of a methodology, beautiful chart. Kind of chart you want to trade. Buying the bottom of the channel, getting out at the top, or buying the breakout, which would be a buy setup and trigger, as I've explained it before. Yeah, definitely interested in this one. What else you got?
CCJ. Chemico.
CUJ. Right.
Isn't that uranium or something?
I believe that's the uranium stock, yeah. Now, you couldn't really get a chart that was more beautiful than this. Huh? Here's the essence of my methodology. 2 complete bars above the top of the channel, Williams above its moving average, buy setup. That expands to 5 consecutive bars, which is a very bullish signal. Support at the bottom of the channel, resistance at the top of the channel. You really couldn't ask for much more in my methodology than this perfect example. And it's a cheap stock, so you can buy a lot of shares, accumulate a big position, make a lot of money with a small move. Beautiful chart.
Why don't we look at a couple of coppers that you had been looking at, because they seem to still be doing pretty good. SCCO, Southern Copper.
Southern Peru Copper pays a beautiful dividend. Let's take a look at it. Here's Southern Peru Copper. Another beautiful looking chart. And again, it follows all the rules. 2 bars above the top of the channel. Williams above its moving average. By the bottom of the channel, get out the top. And here's one that's different, because you'll notice the channel is expanding. The channel is twice what it was over here. That is a very bullish leading indicator by usually about a week or so. And one thing you want to look at right over here, let me do this just for a moment. This stock is paying a dividend. Oh, let's check it out. One moment, please. I think the yield on this stock is something like 6 or 7%. Let's find it. One moment, please. Come on, computer, cooperate with me. I'll be right back. Here we go. Dividend yield, okay, it's 4.7%, which is a lot more than you can get at the bank these days. There is some political risk here because they're located in Peru. But generally, you'll find that these ETFs are equivalents or proxies for copper, whether it's FCX, BHP, Southern Peru Copper, pay some pretty good yields. So there you go, there's copper for you.
All right, well, that's pretty much the stocks that were sent in. Why don't we turn a little bit of our attention to some of the commodities that that you might find interesting. Maybe we could start out in that agricultural area, maybe in the soybeans, and see if there's any developments there that look like they may be of interest.
Let's look at the beans. Here we go. One moment, please. Here's the soybeans. You know, on a daily basis, there's no question that the agricultural commodities are down. But in these markets, you want to look at the big picture. So don't bother with the daily charts. Go to the weeklies or go to the monthlies. See the really big pictures. Here's the monthly chart on beans. And the thing you want to look at is, where are we right now in terms of where we've been before? By which I mean, have we come down to an area of support? And here's the thing you want to look at. You'll notice that we've been down in this area since 2018, numerous times. Why? Because we've had all this stuff going on with China. We've had all the tariffs, and it's pretty much killed the farmer dead. But the bottom line is, do you want to be short over here and go along with low prices and expect another collapse? Or would you rather play from the long side? So what I'm looking at is this. I'm looking at market sentiment. The small trader is very negative, right down here. Because the small trader is so negative, and has been for such a long time, we want to be on the long side of the market as opposed to the short side of the market, but not yet. You want to wait for triggers. So in all the grains, whether it's beans, let me bring up the corn, or corn, the picture is pretty much the same, like so. Here's the corn. And again, the time to have been short was quite some time ago. That time is not now. So you want to start looking for opportunities. We've been down here in the corn prices once, twice, 3 times now since 2015. And when this changes, it's going to change in a big way. So I don't want to be short these markets. I'm looking for places to buy. Haven't found any yet, But remember, there's some good substitutes for this. For example, if you buy or look at Archer Daniels Midland, ADM, or Bunge Grain, BG, or the Andersons, ANDE, they're all very cheap historically. And these are the guys that are going to make the big bucks when these markets turn around, because they've been buying up all this grain and storing it at dirt cheap prices. So that's where the big money is going to be made.
How about in the crude oil arena? Is there anything showing us that that $15 or $10 stuff is all in our history and higher levels could be happening?
Let me show you something in crude. I'm going to switch charts just for a moment, please. Let me change this and go to a different chart type. Show you something very interesting. We're going to go to a long-term cycle chart, and we're going to put up some crude oil, so just bear with me. And here's crude. I'll show you what my work shows on crude. And I'm going to show these charts on Thursday, all the long-term charts. So here's crude, and let's spread this chart out a little bit. This is a crude oil cycle. It's not perfect. We projected a low right over here, but we never take action on a projection until there's a trigger. So when we finally got this collapse in prices, it confirmed that this was a cyclical low. Small trader, very negative, but you'll notice what's going on here. Commercial activity, there's no buying whatsoever by commercials. So what does the cycle say? It says we're entitled to recovery. It's going to be a big one. It's already started. Could be the start of a new bull market, but it's not going to be the kind of bull markets we've been accustomed to seeing way back in the 1980s and 1970s. So as far as I'm concerned, the collapse that we saw with crude oil going negative was the bottom of the market. And the one we really should be looking at is this one here, right here. Let me get it on the screen. And that is natural gas, which looks very different. Here's the natural gas. Check it out. This is the combination we want. Cyclical low, huge commercial buying activity, small trader, extremely negative, and that's the market I'm interested in. So there's a lot of ways to trade natural gas, futures, ETFs, and so forth. What else do you want to look at?
Yeah, let's take a look at, did we look at the gold enough, do you think?
Well, let's
I don't
look
think.
at the future in gold. I think I've got a chart here. Let's check
Yeah,
it out.
because the futures are different than GLD.
It out. GC, one moment, please. Should come right up. Here's the gold chart. No, I do not have the cycles. Let me get a different one. One moment, please. I've got it here somewhere. There you go. There's the gold and the gold cycle. So the gold cycle bottomed pretty much on time. We're halfway through, but again, we're missing some key elements in gold that we really want to see. We want to see commercial buying activity like we did back here. We're seeing nothing. We did see some commercial buying activity right over here. I'm going to show it on a weekly chart. This is pretty cool. Right over here, for the first time in many years, commercials actually bought gold right close to the bottom of this move. But the question is, what are they doing now? Nothing. They're not interested. So again, it doesn't predict the bear market, but it doesn't predict the kind of runaway bull market that we want to see, which would be supported, that we want to see if we're long-term bulls or inflationists, which would be supported and initiated by commercial buying. It hasn't happened yet. Let's compare.
How about in the TLT with regards to interest rates? Is there something there that's telling us anything?
Yeah, check this out. Here is, let me get that chart up here. This is a very interesting chart as well. People really don't believe how regular these cycles are. Check this out. This is a long-term cycle in the 10-year note. And you can see this thing unfolding so beautifully. For example, here's a cycle. Again, not perfect. Cycle low, and here we are midway through the cycle. And what does it say? It says, look, rates have gone just about as low as they're going to go. They might linger here for a little while, but the bottom line is let's look for higher rates, not lower rates. They may stay here for a while, but sooner or later, this debt's going to be financed with higher rates, means lower futures. So remember, futures move opposite from rates, right?
Is the U.S. dollar index giving us any idea? Because it's been sitting around 100 here for it seems like weeks and weeks. So I don't know.
Check this out. This is really cool. Dollar index. Check it out. By which I mean, we have seen the high. The public was extremely bullish right at the top, right over here. Commercials, by which I mean banks and financial institutions, are hedging their dollars. So I will go on record as saying we've seen a top in the dollar, which correlates with low interest rates. So be careful if you want to be long. I don't think the dollar's going to go much in the upside at all, if at all.
Now, Paul Tudor Jones made an announcement. He put a big position on Bitcoin. And can you look at the Bitcoin futures? Because there is different stocks that you can use as a proxy for Bitcoin.
We can look at Bitcoin Cash.
Yeah, let's look at the Bitcoin Cash and see if there's anything. Maybe we could even look at it on a longer term and a short term basis and see what's going on.
There's not that much data, but we can do that. Let me get the chart. Hang on a second. Go to the chart, and we're going to go to Bitcoin. And by the way, the indicators work beautifully on Bitcoin. So here's Bitcoin Cash with the same indicators that we looked at before, daily chart. There's the daily. And we are trading just a little bit under support or close to it. Still a bull market, still bullish on the daily. Weekly chart, still in bear trend. Bear territory happened right over here. Sell setup, sell trigger. So we're trading at or above resistance on the weekly. So again, it depends on are you a trader or an investor? As a trader, you want to be long Bitcoin. As an investor, you want to be short or not at all, and not in it at all.
Maybe sideline, waiting for it to break above the resistance and then
Correct.
View it as something at that point.
The thing that's interesting about Bitcoin for me is that the indicators work extremely well.
Mm-hmm. Do you have an opinion on it as just a generic idea?
I think it's a trick.
Yeah.
I guess I'm, I just can't relate to the concept. What's really strange about it is my son works for a cryptocurrency company, and he's constantly lecturing me, Dad, you've got to do this, you got to do this. I keep on saying, Elliot, I'm just too old-fashioned. I just can't relate to it. And he's explaining all this stuff to me. I can't understand it at all.
It's a little bit like electric cars from the standpoint of until it's the ease of use is tremendously higher than it is now.
Right.
Yeah, it's hard for people to wrap their hands around the fact that it's going to really be used a lot down the road. And the computer in the beginning might have been very hard, and then of course the ease of use, and then the next thing you know, the whole world's using it. If they come up with ease of use on Bitcoin and get a few more filling stations on the electrical vehicles that are not so far apart or whatever, then maybe I think both of those things would have a lot bigger future,
Bitcoin for me is like when I was in my 20s and started trading futures, my dad, who was from the old country, would say to me, so how are you making all this money, Jake? And I'd say, Dad, I buy and sell things that don't exist with money I don't have. And he couldn't understand it. So now Elliot explains Bitcoin to me and say, I just don't understand it. It doesn't exist for me. But he says, but Dad, you trade futures, you should understand it. But I understand it, but I don't understand it.
Yeah. Is there any other stocks that, you'd have on your radar, or commodities that you'd have on your radar? You'd like to share some information?
Yeah. Let me show you this one. Here's one that I have really enjoyed trading because the environment has created an opportunity in stocks like this. Moderna, okay? And if you know, they've been working on this. I think they're in phase 2 clinical trials now.
Mm-hmm.
So there's a lot of good money to be made in these. Not only is it because they're news-driven markets, but they follow the indicators extremely well. And there's quite a few of these. Some of them a little more expensive, like this one. And another one that I really like to look at is this guy right over here, CRISPR. So let me bring it up. CRISPR is involved in the technology that allows gene splicing and has really created a big revolution in the business. Let me show you the CRISPR chart again. a little scary for some people, but generally following the rules extremely well as a trading stock. Other stocks that I like are, as you said before, copper stocks.
Mm-hmm.
What else am I looking at these days?
How about like the oil, like WPX? I mentioned that to you last time because it's inexpensive. Is there something happening in that could have some upside?
Here's WPX. And again, cheap stock, beautiful indicators. They're working really nice. Buying the bottom of the channel, getting out of the top, very good. And thanks for mentioning that. I didn't have that on my list. I'm going to start trading this one because I like the way the chart looks.
Yeah, that came on my radar when Leon Cooperman was on TV talking about buying their bonds. And, you know, he wouldn't be buying their bonds if he thought the company stunk, right?
True.
Any commodities? I know you had thought the orange juice had a decent future. You want to take a look at OJ and see if it still looks decent?
You betcha. Let's look at the juice. And again, I want to mention that I have not traded OJ in many years because, quite frankly, I'd rather drink it than trade it. The problem with juice is that even though it's a good market in terms of the indicators and gives a lot of big moves, it's extremely volatile because the trading activity is very, very low. You generally get bad price executions with market orders. If you put in limit orders, they won't get filled very easily. But again, the thing that I want to show about juice that's extremely important is this. Hold on a second, let me get another chart. This is the chart that interests me. And again, what I like to do is look at getting into big moves before they, knowing about big moves before they happen. So if I go to this chart here, what happened to it right over here? So let me get it and show you something extremely interesting. So I think markets give indications before moves happen. So if we go, for example, to the orange juice market right over here, and we ask the question, what is commercial activity? You will notice commercial, commercial activity in the OJ for over a year has been bullish. That's what commercials do. They get into moves before they happen, before they happen, before they happen, before they happen, and they just sit. Then once the move begins, they begin to unload their position. So this is a perfect combination for me. Huge commercial buying for an extended period of time, cyclical low, small trader very negative. So on a more explanatory basis, we have to ask the question, why are the commercials buying OJ? Well, they're not buying OJ for their health. They've already got plenty of that to drink if they want good health. They're buying it in anticipation of the big move. And so who are the commercials? Well, one of the biggest commercials is Coca-Cola because they own Minute Maid. There's a number of others. But as a futures trade, if you can stand the volatility and the low volume, this is an accident waiting for a place to happen. And that accident is going to be weather. So these guys who trade the OJ on a commercial basis know the weather way ahead of time. And that's what they're preparing for. So mark my words, let's see what happens over the next 6 months.
Yeah, the two markets that seem to be having some decent, shall we say, convergence of indicators is the natural gas and the OJ, huh?
Right, exactly.
Hey, how about we close it out before you give a final word and just look at sugar. It's the most highly traded soft, and it's got knocked down with corn because of the ethanol story. And it's at that 10 cent or $10 bushel, whatever it is, pound.
Sugar right over here.
And yeah, is it bound for single digits, or is there something to be had down here?
Well, let's look at it this way. Why would commercials be buying right over here the largest amount of sugar in history? Why would they be buying sugar on a scale down, starting all the way back here for the last few years? Because they're accumulating it. And if you look at the big picture, which goes all the way back, you can see what they've done. I mean, this is a record amount of buying in sugar. Remember that we can't do what commercials do. They can buy it, they can store it, they can put it away indefinitely. But as buyers, to that extent, I would not want to buck the commercials. I'd want to be long this market, but we have to make sure we do it the right way. It's a buy setup. It's a move waiting for a place to happen. We need to go to our weekly charts and buy sugar when we get a trade, a sugar signal. And there is a stock. It's called.
Can I ask you just one question real quick?
Oh, sure.
On that chart, because we're on this chart now. I just wanted to ask it. That tail down there, surrounded by higher lows, could that be viewed as some type of a turn point?
You mean this over here?
The one we're on right now, where we have a tail down there, and then we have two lows higher, and then you got a.
Oh yeah, that's the beginning of something for sure. We can zoom in on that with the weekly chart and see if that's the weekly. So we can zoom in on that and see that a little bit more clearly. But there is a stock. It's called COSAN, COSAN. I think they're located in Brazil. Let me find the daily chart. One moment, please.
Boy, this is a interesting setup, huh?
Yeah, it is an interesting setup. COZN. Let me see if I can get it up on the screen. COZN. I think that's a symbol. I did trade it many years ago. Let's try it. There's COSN. Let me try that. Just one moment, please. COSN. Where is it? COZN. Sorry to fumble around here usually.
Okay.
It's called COSAN. COSAN. It's a proxy for sugar. Worth looking.
Hold on one second.
And of course, there's a sugar ETF, which is SGG. Let me bring that on the screen. SGG. There's a sugar ETF, and that's the chart.
SGG is the ETF?
Yeah, SGG. Yeah. And you can see what's happened here. We have our first indication of a bottom, which is right over here. Mm-hmm. But that has to trigger by Williams, the blue line, crossing above the moving average, and that has not happened yet. So we're in waiting mode. We're in wait mode.
What would do that? Time or price or both?
Both.
Gotcha. All right, we're at the top of the hour. Jake, please make sure people understand not only how to get a hold of you, but how to attend this seminar on Thursday, because we're just showing the tip of the iceberg. There's a lot more to be shown and a lot more markets to cover.
So it's JakeBernstein.com. And my email address is there too if you want to write. Okay?
Okay, sounds good. JakeBernstein.com, Thursday. Take advantage of that. Again, a lot of the stuff that Jake uses, you could use in conjunction with other things you're doing, and hopefully, again, increase your odds of trying to pick them correctly. Again, thanks a lot, Jake, for being here. Every time we're here, we go over a lot of good stuff. David, I'm going to send it back to you, and everybody else, have a great day out there.
Everybody have a great day. Thanks very much. And remember, don't touch your face or anybody else's.
All right, thanks, guys. Lots of good info today. So just a quick reminder, too, to mark your calendars for next week. I have putting together another Synergy Traders event. This one's going to be 30 presentations, 30 lessons in 3 days. So Tuesday will be stocks and options, and Jim will be doing a presentation then. Wednesday, May 20th, will be all Forex, and Thursday, May 21st, will be all futures, and Jake will be back for that one. And you can access the live events at TimingResearch.com/live. So be sure to join us for that. And just want to thank my guests again for today, Jake Bernstein of JakeBernstein.com, and Jim, the Option Professor at OptionProfessor.com. Thanks, everyone.
Thanks, David.